Good morning. It's Monday, January the 23rd, and welcome to your first edition of the Monday Morning Mortgage Moment. I'm just going to call this a mortgage minute, but those of you that know me know that I can't speak for less than a minute. So bear with me as I push through this segment. What we would like to do with this weekly update is just to give you some pertinent information as to what may be happening in the mortgage market, and something that you can use through the week as a talking point to your clients when the discussion of rates and mortgages come up. This week's news, of course, is the fact the Bank of Canada is holding its first meeting of 2023, and that'll be on Wednesday. And right now, the money is on the fact that the bank will probably lift the rate again, probably another quarter point. If you had asked me on Friday, I might have said that the chance might not happen. We're probably likely. But this morning, the bond yields took a bit of a spike, and that seemed to shift the perception of the market. So if we have a lift on Wednesday, I'm kind of hopeful it might be the last one. As we all know, the bank is pushing this overnight rate to try and get us as Canadians to curb our spending and reduce the inflationary rate, which we are starting to see some declines. The December report came out last week, and we were 60 basis points down from where we were in December, which has us in the 6% window, and the bank's goal, short-term goal anyhow, is to have it at 4%. So if we see a continued decline, then maybe we'll get to that place sooner than later. I earlier referred to the bond yields. That is a tracking that we tend to follow, kind of because it essentially predicates what will happen with the fixed rates, and generally at the 2, 3, 5-year rates will follow in tow with what happens with the bond yields. And through January, we've seen a pretty consistent decline. And again, until today, there's a bit of a spike, but we still sit in the same range we were in August of last year. So it kind of wipes out what build there was through the fall period. And we are starting to see lenders dip a little bit with their fixed rates. Wednesday's meeting and the overnight rate is really going to affect the the variable rate mortgage holders, adjustable rate mortgage holders, and those with home equity lines of credit. Anything that sort of is measured to the prime rate, that's what the impact will be on Wednesday's meeting. So we'll keep our eye on that, and then next week we'll sort of talk about whatever fallout there may be, whether it's lender reaction with rates themselves. I'm hopeful that the variable rate and adjustable rates will start to see a bigger decline in terms of the discount the lenders are offering, and bring that more in line competitively with the fixed rates that are in the market. So I'm going to leave you with this now, and Ryan and I both welcome you to call, email, text, any clarity you want on points or any other updates you may want to have. If you would like to see a specific topic discussed on this segment, feel free to shoot us a note. We'd love to have some content requests as well. But this moment is about to end, and I'm going to wish you a wonderful week, and we'll look forward to speaking with you soon. Thanks very much.